Kevin, let's get to it. Markets held up Tuesday. Despite some weak consumer confidence reading that we saw, we had gold prices up 30, 40 bucks. But the rally really accelerated, of course, after the FOMC minutes came out, and we got all those rumors again about QE3 and presidents really getting behind this to do a QE3 kind of right this second. Is this rally sustainable today?
Well, yesterday was interesting. You know, we saw a pretty quiet morning trade. Wasn't much activity. We stretched a little bit higher at the open. We stretched a little bit lower at the open. Markets kind of gathered their footing, and then post that FOMC, you know, we saw some buyers step in and start to push this market a little higher. Not totally unexpected. I think you and I said yesterday that we do expect this rally to continue just a little bit more. And with, you know, volume lightening up, you have to be a little suspect about being a buyer here. I do say you got to trade this market with caution. Even though we look good and we're starting to leg up, protect.
And I said the exact same thing before we started the show today, which was this rally scares me because we have the ISM number coming out tomorrow, which is expected to be under 50. The jobs number coming out on Friday. We've been disappointed for the last 2 months. Yes, maybe that was already baked in 2 weeks ago, but now I feel like the markets are pricing in some kind of quantitative easing from the Fed, which is far from a sure thing. And I wonder if we get some kind of disappointment sell-off.
Well, the market's never wrong. That's one thing we know for sure. So we'll see what happens, but I think we have to respect the technicals right now.
Okay.
You know, with quantitative easing, a lot of people would be probably very disappointed if they went that route again. I think the consensus amongst the consumer was that it didn't work the first time. It really didn't work the second time. Why would we do that again? It probably just creates an artificial hole that we really are already in a big enough hole.
Right.
You don't want to make that hole any deeper.
And we were discussing that again before camera, and I was saying, well, it did help banks shore up their balance sheets so they're not in the same crisis as, say, the European banks are. But, you know, you and I definitely didn't feel the effects of the stimulus. So you wonder if the Fed might opt for a more conservative approach, like perhaps selling shorter-term securities, buying longer ones, dealing with that kind of stuff that's a little more conservative that will help banks, because they already did and they need more help as well. So let's go to the charts, and I want to see what kind of levels you're watching to see when this rally might break.
Okay. Let's take a look here at the S&P. And I want to go back. We talked, and I know Scott, you know, at length talked about this ominous, you know, head and shoulders pattern that we saw a very, very clean technical break of back here, you know, in late July, early August, which caused that, you know, waterfall cascade type of trade that we saw in you know, the first week of August. We are starting to now correct. And when I say correct, it means we are starting to, you know, retrace some of this downward pressure that we saw. The correction is very technically intact. I do expect that we could see a little bit higher. If we look at some of our key studies here, just our retracement studies, we can see that we are right around 50%. We've captured about half of that sell-off back. We could see a little bit higher, maybe here yesterday into the 1240, 1250 area. But again, I do expect that to be more on the choppy nature. When I say choppy, I do expect this pullback, you know, type of action to continue. So I'd be a little bit weary up here about being a buyer. If you do want to be a buyer, might be wise to wait for a little pullback.
Now you were saying that sort of the investor might be sit this one out. So then for the trader, would you be shorting at these levels, taking some profits at these levels?
Well, this morning we're faced with a gap open. Market's up, I think, 10, 12 handles. I think there's probably going to be a lot of traders looking to sell this gap up.
Okay.
You know, we've seen a nice week and a half rally. I think 6 of the last 7 sessions, plus or minus, have been up. So it might be an opportunity for a little profit taking. Usually when you see a gap up like this, the short-term traders are going to look to sell that.